First, they ignore you. Bunch of nerds and geeks playing with your magic internet money, children, go, whatever. $1 billion leaves the banks. Who cares, right? Then 2016 to 21, then they laugh at you. Bunch of nerds and geeks playing with your magic internet money, $10 billion? Pocket change, kid stuff. Then they fight you. 2022 to 2027, that's for now, okay? We're in the then they fight you phase. $100 billion? Now we got a fucking problem, all right? You collectively have to go away.
Mark Yusko, the founder, chief investment officer, and managing director of Morgan Creek Capital Management, has responded to the ongoing regulatory crackdown on crypto-related firms by U.S. regulators. The U.S. Securities and Exchange Commission recently filed lawsuits against major crypto players, Binance and Coinbase, accusing them of regulatory violations and acting as unregistered brokers. The charges against Binance include allegations of deception, conflicts of interest, lack of disclosure, and violation of the law, particularly regarding the alleged commingling of customer funds. The SEC is also seeking an emergency order to seize assets held by Binance US. Similarly, Coinbase is accused of operating as an unregistered broker and exchange, with its flagship services allegedly violating securities regulations. According to Mark Yusko, this regulatory action is part of the then they fight you phase, where the SEC is attempting to impede the growth of the cryptocurrency industry in the United States. Yusko believes that traditional finance is threatened by the more efficient crypto industry, and the SEC is carrying out the bidding of the established financial sector. As the banking industry struggles to delay the inevitable, Yusko discusses these developments in a recent fireside chat with Felix Harmon.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
We never had it, so we didn't lose it. It was really never there, and it's not unusual for it not to be there because we're so early. If you go back in the history of any market, right? Whether it was, barter markets from 2,000 years ago or a few hundred years ago to the first stock markets around the world to any market, the bad people will show up. And you mentioned leaders, right? To me, there were a couple people you mentioned who were actually leaders, and then there were criminals. Bad people doing bad things. Yes, they became large, in terms of billions of dollars, but they were just bad people doing bad things and stealing. And that's been going on forever, right? Called bucket shops for a reason, called boiler rooms for a reason, savings and loan crisis, bad people stealing. And the response from the regulators is always the same. Comes down hard. That's why I said on that clip, they're going to punish crypto. But I think that was the plan, right? I think all along that the banking industry does not want to be disrupted. Just like I think you mentioned earlier today, we're sitting in this town. There's a law. Everyone's heard the term red flagging, right? We've all heard that term. Anyone know where it comes from? Anyone know the story? Okay, when the horseless carriage was invented, the horse and buggy lobby, I guess it wasn't a lobby back then, it was just the horse and buggy industry, paid the commissioners of this great town to pass a law that made, if you had a horseless carriage, you had to pay a human to walk in front of it with a red flag to warn the other people that you were coming. Anyone ever seen that in real life? No, you've never seen that. That was a stupid law, but it actually existed for a short period of time because the incumbent didn't want to get disrupted by the better technology. When the airplane came out, my grandfather-in-law left his safe job at the train company to go work for American Airlines, and his parents were horrified. And the train companies passed out pamphlets outside his little place in Tulsa, Oklahoma, saying that if you got on an airplane, you'd die because your body would cave in on itself when you went over a certain miles per hour. I flew on an airplane today. I'm okay. It worked out just fine. But that's what's happening with banks right now. 2022 to 2027, that's for now, okay? We're in the then they fight you phase. $100 billion? Now we got a fucking problem, all right? You collectively have to go away. Well, how are we gonna do that? Well, the banks are gonna pay people, lobbying, fancy word for corruption, and they are going to assert their influence through regulatory change or regulatory arbitrage or regulatory pressure or just simply putting people out of business. And you talked about the just price to get an audit. Does it make sense? Did the audits get better? Did they get more efficient? No, but they got 7 times more expensive. That is a form of repression. And, take banking. What did Signature Bank do? Was Signature Bank a crypto bank? Are you freaking kidding me? Have you looked at their balance sheet? It's real estate loans that are all going to zero because they, haven't even been in an office building lately. There's no people in it. So that's why Signature Bank had a problem. It's not a crypto bank, but it got taken over a weekend with no warning because it was quote unquote a crypto bank. And Barney Frank said they wanted to send a message to crypto that we are serious. We're going to shut down this bank with no real reason other than they could because it had this much crypto deposits relative to its deposit base.
Amidst the unfolding drama involving the SEC and Binance, Binance US has released an official statement addressing its users via Twitter. The statement accuses the SEC of employing aggressive and intimidating tactics as part of an ideological campaign against the American digital asset industry. Binance US, along with its business partners, has faced challenges due to these tactics, causing disruptions in its banking relationships. As a result, the exchange has decided to suspend U.S. deposits and notify customers that fiat USD channels may be temporarily paused from June 13, 2023. Binance US urges customers to take necessary measures regarding their USD holdings. Additionally, the statement emphasizes Binance US's commitment to maintaining one-to-one reserves for all customer assets and assures users that their funds are secure. While there may be delays in processing withdrawals due to high volumes and weekend bank closures, the exchange's trading, staking, deposits, and withdrawals in cryptocurrencies continue to operate without interruption. Binance US expresses its openness to a constructive compromise that fosters a thriving digital asset marketplace in the United States, while pledging to vigorously defend itself, its customers, and the industry against the SEC's perceived unfounded attacks. In the interview with Yusko, he shares his thoughts on how he anticipates the situation will unfold, providing further insights into the ongoing developments surrounding Binance, the SEC, and their potential implications.
Then we go to the whole next level of, okay, if businesses are going to embrace this technology, which is as inevitable as flying on an airplane or driving in a horse's carriage, there is zero chance that all of the financial industry that we all take for granted today, that's been a great run for the banks for 800 years, since the Medicis and the Rothschilds, there is zero chance that 100% of that is not going to be on blockchains. It's as inevitable as air travel. 100% it's going to be on blockchains. It's not going to be in centralized databases. It's not going to be Visa today. If you used a Visa card today, it ran on COBOL. It runs on a mainframe computer written in COBOL. I'm asking the guy at Visa, I said, well, isn't it kind of a problem? And he says, yeah, but it's kind of a moat because no one knows how to hack it. But when it breaks, we literally have to put a light on at the Sunnyvale retirement home and get some 80-year-old to come fix it. And he's not joking because my 85-year-old dad can still code COBOL. None of you can.
Mine too.
Okay? And so that's the reality that is coming. But look, the banks don't want this to go away. For 800 years, they've had this amazing run. In the old days, I lent you money. I wrote down on my ledger, Felix owes me $100. He comes back to pay me 110. Oh, Felix, it says 200. You owe me 220. He had to trust me. He had to trust. So the Medicis, 800 years ago, said, no. Felix, you keep a ledger. Mark, you keep a ledger. And we, the benevolent Medicis, for a small fee, will decide that the ledgers match. Dual entry accounting. But the Medicis, I'm unscrupulous. I could pay them a little something, something. Felix comes back, pay me 110. They're like, Mark's book says 200. But my book says 100. I'm sorry. Mark's book is you got to trust us. We're the Medicis. So that now we don't have to trust anybody because we have truth. Blockchains are truth. And with truth, 7 trillion Okay, come on, y'all. Trillion. The T word. See, we've been anesthetized to how big a trillion is. Lock these doors. And it's been going a long time, by the way, okay? And I'm going to miss my flight. But a trillion is I got to lock these doors. Y'all got to sit here and listen to us natter on, okay, for 31,710 years. And we got to come up with a way to spend $1 every second. $1 a second for 31,710 years is 1 trillion. So 7 of those babies are wasted every single year. And I say wasted, meaning that is the rent that's being extracted by the banking system, the Medicis and the Rothschilds. You guys know this? Single family, the Rothschild family. Now, it's a big family, don't get me wrong. Big family. Has the same wealth as the bottom 3/4 of the people on this planet. One family, 3/4 of the people. So the banking industry is a very, very profitable business. And it is at risk, right? The same way that air travel was at risk or, horse and buggy.
In the meantime, John Reed Stark, the founder and former chief of the Office of Internet Enforcement at the U.S. Securities and Exchange Commission, has issued a warning to cryptocurrency investors, advising them to remove their digital assets from exchanges. According to Stark, the regulatory crackdown on the industry has only just begun. In a tweet, he urges investors to get out of crypto platforms now, drawing on his extensive experience in the SEC's enforcement division for nearly 2 decades. Stark asserts that cryptocurrency trading platforms are currently facing a regulatory and law enforcement siege in the United States. As a vocal critic of the SEC and with no personal involvement in the cryptocurrency world, Stark emphasizes his independence, objectivity, and neutrality in delivering this message. He invites cryptocurrency investors to consider whether it is time to exit exchanges and shares his perspective on the situation. For more Daily Dose crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.